The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Tencent holdings with the ticker symbol TCEHY. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So here we have Tencent again on Thursday. So I'm doing more Chinese stocks for the channel, but I'm also open to donations. So if you guys want a specific stock request, you can look in the video description below. So let's take a look at Tencent on the daily chart. Basically, it looks like last Thursday, prices went up a little bit, sold off. And the reason it's still dropping a little bit lower is because this measure move target. So the market moves in twos. This was the first leg down. Prices are currently in the formation of the second leg, and it's trying to reach this 39.21 level. But the problem with that is that there is strong support that Tencent is still finding at this 42.04 level. Because if I go zoom out, you can see in the past this was a very strong support. So it looks like prices are kind of just stuck inside this ranging pattern of finding resistance at that $50 level and finding support at the 42 level. There was a breakout, but prices came back inside of the range. So pretty much it's an 8-point range. We're at the bottom side of the range. Range rules are prices go from the highs to lows, lows to the highs. So there's a good chance if we get back above the EMA and hold it, we can probably be off to the highs of the range. If not, if we go back above and find resistance at the EMA, we might reach this measure move target. So we'll have to wait and see. But as right now, it looks like some Chinese stocks could be reversing. So that will probably lead Tencent to also rise in price. We'll have to wait and see. But as right now, we're still finding support. It's not really that bearish right now. We have this measure move in play, but it doesn't have to be reached because this level could be stronger and not allow the sellers to reach it at this 42 level. So we'll have to wait and see. We are seeing some buying occur at this level, but we want to see price to get back above the EMA, hold it, and continue moving higher. So we'll see if that occurs. Let's take a look at the weekly chart. Here's the weekly chart for Tencent, and what I want to do on this chart is show you guys a repeat pattern. So I'm going to do a repeat pattern mini course for members that will be coming out on June 1st. So if you guys are interested in learning more about this, you can go and join the membership in the description below and the comment section. So let's take a look at Tencent on the weekly chart. Basically, we had this huge, uptrend that led to $99 being reached. Then we saw this huge move down, a move up, and now we're just kind of consolidating. So this is very similar to what happened in the past. So you can see that we had this move up right over here, pretty much stemming from, all-time lows for Tencent to about 2018. Very similar to what happened right about here. So from 2020 to about 2021, there was this huge rise in price, and right near the top, is a capitulation, meaning the bulls just give everything they have, and that's, usually can mark the top. So that's exactly what happened. Basically, it's just an overextension of price. So we had this uptrend, overextension of price in both of these time periods, and prices sold off inside of a downtrend. So this is the downtrend right here, and this is the downtrend right over here. Let me go and clear the chart out. So I showed you guys the uptrend. This is the downtrend right here. This is the downtrend right here. Now we have another similarity between the downtrends. So this downtrend was below the EMA the entire time up until it made a capitulation for the sellers. So the bulls can do it, and also the sellers can do it. So the sellers pretty much gave it all, and they pretty much got really overextended from the EMA. Same thing right here. This is a V bottom reversal. Basically went really down fast, and we can go up just as fast as we went down. So the uptrend was very similar. The downtrend is very similar. And look what happened after the downtrend. After the downtrend made that V bottom, prices shot right through the EMA, just like what happened over here. And then after that, prices kind of just consolidated, and then it started the bull trend. So that's what it looks like we're doing right over here. It looks like we're just kind of consolidating before we start the new bull trend. Now, is this going to happen exactly like in the past? No, it's not going to happen exactly like the past, but it's following it pretty closely already. So we had an uptrend that was very similar. Overextension led to the crash, just like what happened in the past. We had a downtrend. Overextension led to a reversal, just like happened in the past in 2018 to 2019. From October 2018 to 2019, that was the V bottom reversal. Just like from October 2022 to January 2023, that was the V bottom reversal. And then prices started finding support right about here at this $40 level, very similar to what we're getting right now. So you can see that prices are, you know, just bouncing off of this horizontal line right about here at this 41, 42 level, just like what we did in the past. And also what's even more striking is that after this up move, let me go and show you guys like this. So we had a huge up move, and then we had a down move like this, just like where we're getting right now. We had a down move, and then sellers could not reach the mesh move target, just like what sellers are doing right now. They're unable to reach it, well, right now. And then, you know, prices pretty much just kept on bouncing like this, and then eventually led to higher prices. So we'll see if that occurs. Since it happened in the past, it can happen in the future. Most definitely, we'll see if it does. But you know, that's what I want to show you guys. I noticed that on the chart, and we'll see if that occurs. But as right now, it's playing out like that. And let's just say where we are right now is right about here. And let's just say when the bull market started, it started about, I would say, when we get back above the EMA after this double bottom. So it took about 240 more trading days. So if we do 240 more trading days over here, what does that mean? So 240 more trading days is about end of this year to about January of next year is when the bull market could start. Again, just estimations based on the past. We'll see if it occurs, but it's definitely something to keep note of. This is Vee Trades, and thank you for your time.